day, all. Ira Epstein of Flynn & Associates with your metals market wrap-up for this Tuesday, December 10th, 2019. I don't even know where to begin with the news for you. Impeachment going ahead. There'll be a vote on it very shortly at the House. We then don't know where we're at with the U.S.-Chinese trade deal. Mr. Trump, President Trump, is certainly keeping everything close to the vest. One report early in the morning, it's going to be delayed. If you watched our Ag Secretary Perdue, his guess is it will be delayed. Then Larry Kudlow comes out and says, no, that is still very much on the table. This is called playing your cards right to the end. And if they can't get China to do anything, does the president dare make that move? I'm sure he's watching the stock market. He's probably using it as a laser focus, in fact, and wondering what does he have to lose by a 30-day extension or something of that nature into 2020. Could be. USMCA deal, well, it got the amendments all signed today in Mexico City. However, then Senate leader McConnell comes out and says, I don't think the Senate's going to vote on this until after the impeachment trial. So you talk about giving a little, taking a little, that's it. And the metals were able to stay fine with it. Now, the platinum exploded in price today, but not necessarily for a demand reason. Supply issues are what's happening. A couple of the mines in South Africa, it sounds like they're underwater. Yeah, I'm not just saying that. I mean underwater. And they can't fire up the coal and everything else they need to get the mines producing the way that they want, and it's become an issue. You'll read about it if you want to go Google it. You'll probably read some stuff about that tonight. In the weekly chart of closes on gold, the market has come down, but you'll notice how flat it's gotten. This fits in with the gold report that I had written, not written, but published, as you know, as a video about 2 weeks ago. It's off the website, so for those of you that saw it, I think you'll recall what I was talking. I won't relive it here. In looking at the daily bar chart, what you want to see if you're going to see a year-end rally, that's the way to phrase this, is I don't want to see the market really close under that 1450 level, and I'd certainly like it to show some signs that it can get over the 1490. So what's it doing right here? Well, the reason that I was saying bullish, not bearish, is because the swing line is up. You've got higher lows, higher highs. That pattern gets destroyed. If the market takes out 1463, that could give you lower highs and a lower low. So at least I have a number to look at. What about resistance points? I want you to look at the 18-day average of closes in red, and this is the right through here. Notice how the market's just come up to it. It's been playing there. That is the resistance point. Now, if the market can exceed that, another resistance point becomes the 1499.30, and we were just talking, can the market get through that 1490 level? So at least I have some numbers that are making a bit of sense to me. But what if the market were to take out that 1463 level? What about the downside? Well, if that happens, the first support, I like where it's at least, is 1458.70, the lower Bollinger Band. And remember, on black Bollinger Bands, it's an algorithm designed to keep the market trading within them 95% of the time. What happens eventually is if the band can develop sideways action, and I don't think you'd argue with me that that's what's trying to develop here, you eventually get a breakout. Question is trying to figure out which way the breakout's going to go. I know what the seasonals in the past have done, but that does not mean this market's ready to pick up and run. What makes things even more interesting is the president, and I'm talking President Trump, is holding his cards close to his vest, which means December 15th could be when the Chinese tariffs come on. Guess when that is? That's Sunday. So you can have thinner market conditions just because it's a Sunday and in the evening. I have no idea what you do with that. When we take a look at momentum, the market is still have downside momentum, the bias is down, and prices have the swing line up. Again, I'm going to say this is a spinning market. It hasn't shown its hand just yet. When I come to GLD, the trend has been lower highs, lower lows. You rallied back today to that 18-day average, and you're fighting the battle right there. Not telling me much of a story. Momentum is sitting here flat. But who's got the upper hand? the bears. And that is because you've got the lower highs, lower lows, and the settlement at 137.97 is under the 18-day average. Assuming the market breaks, you could get to 136.88, the lower band, for the first potential support zone, with resistance at the upper band. We've already seen that that one has been working at 139.37. When we come to the juniors and the gold miners, the GDX is, I'll call it, you've got a higher high, lower low. So immediately I see there's no trend by the swing line. The bias is up and momentum is pointing down. The chart is basically a mess right here, and I don't see any pattern immediately at hand that tips it off one way. Now, bearish can happen if you closed under the 18-day average of 37.83, but then you get the 45-day average as the first support zone. When I come to the full-size GDX, well, I want you to look at the 18-day average. 3 days in a row you've been fighting your battle against it. You finished off today at the 27.13 level. The 18-day average is 27.05. So the bias is up, the trend is down, and momentum is gone flat to slightly pushing lower. Again, no edge in the market that I see. The gold-silver ratio using Feb versus March silver, backing off just a tad. But remember, this market is still, it's been up as high as 93. It is staying over the 18-day moving average of close differential, which means the bias remains up in that. In the silver itself, we started challenging this lower Bollinger Band area right here. We hit it, to be specific, on this day, which was December 4th. You had a big outside day where you went from the upper band to the lower band. Then the market started fighting a battle against the 18-day average of closes, and again went for that lower band. You stalled there yesterday, you've popped back into it, but who's in control? The bears. The market has pushed its way down. The swing line has got lower highs, lower lows. The market's under the 18-day average of closes, so the bias is down. The one thing that's for the bulls, or well, actually for the bears, that they have to be concerned about, is the right way to say it, is what? You're oversold and you're running on that band. That's about it. Until you get back over 1712.5, as I see it, the bears are controlling this market. It's nowhere near embedding or changing from oversold to locking in a trend. In the copper market, this is wish and hope. What do I mean? And it's not two different people. Wish and hope. That's pretty good. You've got the lower low, the higher high. Okay, so I know it's not a trend market. The next thing I look at is the market was trading sideways, got over the upper Bollinger Band last Friday, followed through on Monday. Today, the market's also followed through here. Now, you know this market's vulnerable if come Sunday night you saw the tariffs on the market. It's 3 days in a row over the upper band. It's not yet a sign of super strength. It's ahead of itself is how I'm defining it. And you are in overbought territory. If you were to pull back, supports back wherever this 18-day average is, and it's moving at about 60, 70 points a day right now. So it could easily be near the 267.80, 268 level by tomorrow. In the platinum, this is what you looked like going home. So you've got a market that if it got over the 909.40 area, and I'm pretty sure we would have talked about this yesterday, that could set the market into the higher low, higher high pattern. This is how it looked yesterday. And frankly, these arrows wouldn't have been pointing this way. You'd have had a higher high, lower low, but you're setting up the possibility. If you get over that number, one of the numbers that becomes alive is wherever that upper Bollinger Band is. Obviously, the first resistance are these two numbers, 905.90 to 908.70. The market last night opened itself, I'm looking to see if I've got it, 902.40. So it didn't jump. It actually opened steady at best. And then the news started coming out about that. I was reading about it, and I'm going, uh-oh. And you went right up to that upper band. Now you've got tight support between the 18-day average and the 100, the green and the red. Something else could happen tomorrow. You might get a bullish crossover where the 18-day average gets over the 100. Admittedly, overall, you're pretty much sideways, but I think the bulls have grabbed control of the market. You're not even in overbought territory. And of course, my favorite in terms of the bullishness has been the palladium. I've been a broken record on it. I thought way back here at the early part of November, this could have been more of an important top. Once you cleared it, you haven't looked back. The market caught all these shorts in here, and there is no such word as high. You know, I've learned that in trading, and there's no such word as low. I have experience so far back. I was a broker in '69. And I remember when the potato sack was worth more money, believe it or not, than the bag of potatoes. And they stopped trading that contract. We were trading eggs, shrimp. I remember all these things. But here's what I learned. Don't get enamored with the word high or low. If you did, you've missed out on the stock market as well. Last, in the dollar index, the pattern has turned bearish. Lower highs, lower lows with today's action. However, it did it into an oversold area. You've got to be careful of that. And if you get over yesterday's high, and yesterday's high in the market was 97.70, you negate that pattern and you could end up right back into this resistance zone of 97. Let's just call it the 97.80 to 97.85 level. Close over that, the dollar gets a bid. I don't know how to play that market for that because I don't know what Sunday night's going to hold in these tariffs. Very difficult time. But what I do each morning is I put out a recording. Now, I had a problem this morning with my recording. I was recording today at about 5:15, 5:20 in the morning. And I had some people write me and they said, Ira, with the Cyber Week, about a year ago they were trying my service, and sometimes it didn't come out until their time. They must be on the East Coast, about 9, 10 o'clock. I avoided that. I listen to what people say, and I start putting these out much earlier. And when I do my ETF on the stocks, I'm going to probably try to get those recorded around 8 a.m. Central Time. That's before the stock market opens in New York at 9:30 Eastern Time. So I think we'll be fine with that. And you're all writing me, and I appreciate what you did because you're giving me ideas on which ETFs you like. I might have to do specials each week of a couple of special ones, but it's, you know, I'm developing the concept and I'm getting a big response. On our Cyber Week, we are offering for free my charting course. It's $179.95 if you go to the website. That course is being thrown in for free as long as you buy a 1-year subscription to my research. Now, when you do that, I'm going to cover, and you'll see in the videos, there's about 5.5, 6 hours worth of videos, 54 of them. You see what I do, you do the same thing. I'm going to teach you how to draw by hand the swing line on the charts. You're going to do the same thing. Obviously, I created an indicator that'll plot it for you. But if you can't plot it by hand, you don't know how to use it, and you don't understand it. I go through the same concepts with first animated PDFs, and then I walk you into real charts, and literally all of these different studies. And the reason is conceptualize, then apply. Can you add to this? Of course, you can add all the studies that you want in any way. But that's the purpose of the sale. The sale is to give you what? A learning ability that I've got, at least teaching you what the way I look at a chart. What you do with that, I can't tell you after that. But then each morning I'm putting out my subscriber video. Then I'm writing at 11:30 in the morning. You're going to get a written update if you have our full subscription as to what I'm seeing that's important for that day. Then in the evening by 8 p.m. I put out another commentary piece. So do I do research all day? You can count on it. I do. But that's what trading's about, doing a certain amount of research, but not writing a lot. I like to use videos more than I do anything. The writing is meant to be that you can read anything I do in commentary or written ideas in under 2 or 3 minutes. I'm bringing you up to date with what you need for that point in time. So how do you get this? It's pretty simple. All you need to do is if you buy any of my research packages, and you can go on our website at www.iraepstein.com under the word research, take a look at the different packages. If you want to just buy the course itself, well, you're welcome to do that. You can always call my staff. They'll be happy to help you with all this. I'm Ira Epstein. You have a good day.